The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, more buying strength in soybeans and meal, and then in KC and spring wheat as well on the day on Tuesday as we watch this market trade heading towards the end of the week and the big USDA reports in front of us. Joining us here today to talk about the markets, Jim McCormick, agmarket.net, is with us. Jim, good to have you back on the show, sir. I hope things are going well up there in Illinois.
We're doing well up here, Jesse. Thanks for having me on. Maybe a little bit cold. We dealt with snow off and on over the weekend. Coming into work today, the temperature in my car was showing 21 degrees. So, we're on spring break here in Northern Illinois, and the ones that are stuck up in Northern Illinois are really, really feeling just jealous of the ones that made it down to South Florida. Let's put it that way.
Yeah, let's put it that way. And it's not conducive to any spring field work either with cold temps and snow. And I know some heavy rains in parts of the Eastern Belt, Southern Illinois, Indiana, Ohio, and still a lot of snowpack up north. So we got a little ways to go before we start getting into the fields. But I know in front of us, I mentioned those USDA reports. That's a bit of a kickoff to spring planting season usually. And we'll talk about that here in a second. This grain market, though, pretty impressive day once again on Tuesday in the soy complex. Talk about what you're seeing there. Did we just overdo it to the downside, and now maybe we're trading some supply and demand fundamentals once again and seeing some money flow back in here, Jim?
Jesse, I think you nailed it right there. I mean, that bean market just got absolutely obliterated here late last week, 10, 11 days down. It was just massive liquidation. We overdid it to the downside for plain and simple. The reality is that ending stocks are still very, very tight in the United States. Now, if you're trying to sell beans to the Chinese per se, we're overvalued. We're $50, $60, $65 a ton overvalued compared to the Brazilians. So if you're a value shopper, you're not going to buy U.S. beans. But here's the problem. If you are, for some reason, are falling short of beans in the world and you kind of need them a little bit quicker ship, there's over a month delay out of Brazil. So the market is kind of trying to balance, being overly valued compared to the Brazilians, but also not so cheap that we give away, that someone swoops in and buys all the rest of our beans at this point in time. So yeah, I think the very crux of it is they overdid it. Same thing for the meal. The meal market kind of found resistance at 500, then it broke down hard, and now it's coming back because the reality is the supply of meal is still going to be relatively tight due to the lack of production out of Argentina.
Well, and that lack of production out of Argentina, plus any potential weather concerns or what the acreage outlook looks like here for beans in the U.S. moving forward. China is, in the ring buying corn especially, but, even we look at soybeans, we've slowed down, but those export inspections on Monday looked fairly solid for beans last week. I mean, there's just, I'm with you. There's a lot of things at play here in this soy complex that seemingly giving reason to the funds to kind of stop that long liquidation and come back in here. And it feels like, Jim, that maybe, no beans, that $13 mark here today, getting back there. Wonder, if that might be a good point for a new crop beans possibly as we move into the end of the week.
I think it may go creep a little bit higher, but I think you're right around 13. I think is probably not a bad place as we see where these numbers kind of lay out. I mean, remember, this is just intentions. So a lot of these numbers could change. I mean, the bias is, a little under 90 million acres of bean or corn. So more corn acres, a little less bean acres. So I think people are a little bit concerned that maybe we plant a little bit more corn acres. So the beans are hedging their bet a little bit. But, a lot of water's got to come under this bridge. And you mentioned it earlier. I think, I look at this, Jesse, as like you said it best, when this number gets released at 11 o'clock Chicago time, it's like the starting gun to me for spring planting. It seems like up until this report, we kind of talk about spring weather. but we really don't concentrate on it. Once we get through this report, then we're going to see, because a lot's going to hinge on what happens. If they say we're going to plant 91 million acres of corn, we're going to plant more corn acres, but where's those corn acres, additional acres coming from? If they're coming from the northern plains, that could be a real concern, considering they're dealing with more and more snow, very, very cold temperatures right now. The modeling suggests that this cold temperatures are going to stick around for another couple of weeks. So, the risk of prevent plant becomes a lot higher as that cold weather sticks around. So we do pick up corn acres, but you pick them up in the wrong part of the country. Did we really pick them up? Those are some of the questions the market's going to be analyzing once we get the number, not just the number, but where that data kind of projects those acres are going.
Well, and talking the corn side of the equation, obviously a lot of Chinese buying of corn here the last, 11 days or so. Nearly 114 million bushels of corn has gone to China. I've heard some talk that maybe they're trying to fill their reserves with corn and then beans out of South America and some beans from here. What's your take on that, Jim? Are they trying to fill their reserves over there? Does that appear to be what the case is here?
Yeah, there's no doubt about it. If you look who's doing the buying, you are seeing some buying done by some of the Chinese trading firms, which are also seeing buying done by the Chinese government. They are building back their reserves. Now, what are they building back from? We really don't know. Everyone's got guesses, but the Chinese government does not put that data out. But, they saw what the price of food did just a year ago at the very beginning of the invasion of the Ukraine. They know that this war, maybe they know, fearful the war is going to get worse instead of better. Remember, Putin just met with Xi here last week. And then the other thing is, we're not exactly playing nice with each other here in the United States and China. So maybe you're seeing a little bit of preemptive buying, a little bit of a hoarding right now, fearful of what politically could happen if things really go down the wrong road. But there's no doubt about it. They're restocking their reserves.
Well, and with this corn market too, we have all this Chinese buying, which is good for this corn trade, but yet corn kind of just a slow churn. We're not really moving, we're not seeing a big 20, 30 cent move, every single day. It's just kind of holding the market steady, maybe up a little bit here and there, kind of getting us, as we head into this report on Friday, just kind of easing into it is what it feels like, Jim.
Well, there's no doubt about it. They're easing into it. This report's a big number. We got the acres, but the other number you got is a quarterly grain stock number. The average trade guess is suggesting we're going to have about 280 million less bushels of corn available around this year at the beginning of the quarter compared to a year ago. But the real question is what that number is going to be, because you look at the range of estimates from high to low, it's over 600 million bushels between the high end and low end of the estimate, which is roughly a little more than a third of our carryout. So there's just a lot of uncertainty going into it. And then you also got to remember, Jesse, it is the last trading day of the week, last trading day week of the month, but also the last trading week of the quarter. So you are getting some positioning, I think, by funds as they're trying to make some adjustments as they try to get a hold of the new situation we're in. Remember, the Fed's still raising interest rates. We have this banking crisis. It has kind of moved to the back burner, I believe. But the reality is there's still a lot of concern. The funds get a little bit concerned if the banking crisis gets a little bit worse. Will they have access to as much margin money? Or if they need to borrow money for margin calls, are they going to pay more in fees and interest to do it? So it's caused them to par down a little bit of the position as well, I believe, as they just kind of wait and see both the macro picture as well as the numbers.
That's a great point you make. Not only do we have these USDA numbers on Friday, but end of the month, end of the quarter, that to me screams that we're going to have volatility one way or another. So as I'm looking at my marketing plan heading into a big day like this on Friday, what should I be thinking about? What should I be doing to protect some of the risk that could be out there, Jim?
Right now, I'll be blunt. Just I hate trying to trade this report on Friday. It is a brutal report because you're getting two numbers and you don't know which way the computer is which analog computer program is going to read. Are they going to read the stocks first? Are they going to read the acreage first? We've seen the market surge and then a second later crash, or vice versa. So trading it, be very, very cautious is what I'm going to say. As for producers out there trying to mitigate risk, what I've been doing the last couple of days is using kind of the shorter dated options. The CME group, if you're talking new crop specifically, the CME group, CBOT, has these new 1 week options for new crop. You can buy them that'll expire on this Friday, or you can buy some options that are called week ones that'll expire next Friday. You can buy some of those for both corn and beans, as well as I've had some customers go ahead and go out a little bit further, buying some May short-dated options that expire in the third week of April. Plain and simple, if you've sold a lot of cash grain, you've got a lot of futures positions on, you might say, look, I'm going to go ahead and buy some calls just as a way to mitigate that risk in case these corn acres surprise us and we come in at the low end of the range, or potentially the quarterly grain stock gives us a bullish number. On the other hand, if you are a producer, we've had a nice little rebound, not as good as I'd like. I'd like to get this market closer to 580. There's a little double bottom on the December corn chart right around 583 that we scored back in December. That also pretty much lines up near the 50-day moving average. I'd like it to get up near 580, but you may say, look, I just got too much exposure. They come in at 92 million acres of corn plus, because the reality is when you talk to producers, the money was in the corn this year is what everyone tells us. So you want to hedge your bet. What if the producers come in and say 92.5 million acres? It's the same situation. Go out, buy those week options that expire the day of the report or the week after the report, or even maybe go out to the May short dated. You're not spending a lot of money, but you're protecting a lot of equity. The reality is, you tend to get about a 3.5% move in the corn market on this report, which is roughly around 20 cents. I think the beans are kind of the same situation. By historical measures, this market is going to move on Friday. There's no guarantee of it, but history suggests 20, 25 cents up, 20, 25 cents down on the corn. Same thing with the beans. That is what you would anticipate, not a very quiet day. So options are a good way to spread off that risk.
We are having a conversation here today with Jim McCormick of agmarket.net. Jim, the wheat trade, a little bit of spreading between KC spring wheat up moderately, Chicago wheat up just slightly at the close. But I know you alluded to this earlier, weather, supply demand fundamentals coming back in here, dryness in the hard red belt, and then that snowpack in the spring wheat belt. It feels like that's having a bit of an influence here as we get into this week, Jim.
It definitely is. I mean, the Kansas market, obviously, if you're listening from that neck of the woods, you can't buy a rain or snow. So we're seeing a little weather premium come back into the market there. Obviously, the spring wheat, we're looking for concerns about, will that get abandoned or will they, prevent plant? Chicago wheat, the reality is that wheat market, that product has been the whipping post of commodities at this point in time. It seems like buy KC, sell Chicago, buy Minneapolis, sell Chicago, buy corn, sell Chicago wheat, buy beans, sell Chicago wheat. So the Chicago wheat is the one that we've seen is going to be lagging the most. Wheat probably looks the best. The Midwest, where the soft red wheat is planted, has had quite a bit of moisture, so the crop looks good. But we do have to be a little bit cautious, Jesse, because the funds are carrying such a record short position of that wheat. If you, for some reason, can give them a reason to get out of this wheat, maybe it's more concern about the grain corridor going on. I mean, the reality is the Ukrainians say the corridor is open for 120 days. The Russians say it's open for 60 days. And then the Russians are also saying they're not going to block the export of wheat, but they're also saying they're not going to allow wheat to be sold under a certain price, which in essence is stopping exports. So if something would change dynamically, and all of a sudden you could see the same kind of reversal out of that wheat position, kind of like we've seen in the beans, where the bean market just had that hard liquidation and now it came back up. The wheat has bounced back a little bit, but it may have more to go if we start seeing the world concerned about the supply of wheat.
Well, and that's a great point you make. Feels like a lot of lip service from Russia right now and a lot of uncertainty as to what could happen there. So I think you're spot on. Going to be interesting to watch this wheat market moving forward and watch the money flow there. Let's talk livestock, cattle, hogs. Fairly quiet day there at the close. We had a really robust day Monday, and then we just couldn't seemingly follow through. Any thoughts in this protein sector as we near the end of the month, Jim?
Well, like I said, I think Friday was definitely a little bit of correction move in the hogs and everything else. Today was more consolidation. The cattle market, Jesse, to me kind of reminds me a little bit like the bean market. It really got, we know the supply is tight. The cattle and feed numbers have been telling us for months, this cattle supply is going to tighten. And, and if we start building back the herd, it's only going to tighten even more. And everyone's bullish on the supply side. But then we saw what happened here last few weeks. We saw some pretty hefty liquidation of the futures position because of fear of demand. And that fear, a lot of it had to do with the banking crisis. Mm-hmm. Inflation, but banking crisis kind of spooked a lot of people. And if people are nervous about their money, they may not be going out and going to a little bit cheaper food way to, feed themselves, cheaper cuts. Now we're seeing to catch a bid right now because like A, the stock market's come back a little bit. B, it does look like the Fed and the government managed to at least stop the banking crisis from spiraling out of control. And C, the reality is the American consumer right now at this point, even though he begrudgingly complains about the high cost of everything, including their credit card debt, the reality is they are still spending money and they're still going on vacation. As I mentioned, I'm up here in Northern Illinois here during spring break and where it's the cold, but we do have some customers and clients down in the beaches of Florida and places like that. And from what I'm seeing it is jam full. Airlines are full, the hotels are full. And that's a very good sign in general that even though there are some concerns about the U.S. economy, people are still going out and spending money. And that is what's going to help drive that protein market back up as the consumer demand, maintains, a bit under the market.
Very true. Very true. One quick thought. Do we have anything to worry about, do you think, with the feed use number for corn impacting the cattle market possibly on Friday?
It could be a little bit on it, but remember on this, what we're going to see is kind of where the disappearance is going to be. I don't think it's going to have a huge impact on it right now. I mean, that's the hard thing about this, Jesse, that feed use number. And sometimes they seem to find bushels. Sometimes they seem to lose bushels on this number. Mm-hmm. I am a little bit interested to see if this corn crop technically gets a little bit bigger per se. And the only reason why I say that is I've talked to a lot of clients in the Eastern Corn Belt, specifically Illinois and Ohio and Indiana, whereas they're pulling grain out of their bins as we speak. They're finding bushels. In essence, the test weight was a lot better than what they thought it was. And, as much as 5%, I had one client said, his crop probably, is 5% better than what he thought, plain and simple, because that test weight came in a lot heavier than thought. So it'll be interesting to see if that shows up on the numbers on Friday.
Well, great thoughts, great things to consider. And I know, Jim, if folks have questions, they could reach out to you and the team there, agmarket.net, very easily to get some of those questions answered, can't they?
Exactly. Go to agmarket.net to sign up for our research. Call any of the ag market brokers at 844-424-6758 as well. We'll be happy to help you out.
Well, we appreciate the time and analysis as always. Jim McCormick with agmarket.net. Thank you for joining us, sir. Have a great week. We'll talk to you again soon.
Thank you for having me, Jesse.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.